The Senate working on a bill that would loosen banking regulations that were put in place after the 2008 financial crisis. I want to bring in Richard Hunt, President and CEO of the Consumer Bankers Association. Richard, you're a fan of this bill, right?
Sure, Charles. I think it's a good first step. I wish it would have gone further. But this is a bipartisan approach to right-size regulations. Dodd-Frank was passed some 8 years ago. One thing we're learning, Charles, not all Dodd-Frank rules should apply to every regional bank or every small bank. So I'm glad this is a bipartisan approach, which, you know, in this town in Washington, we're not hearing that very often, bipartisan approach to right-size regulation. Right. So, yes, this is a good first step.
To your point, the audience, you know, there are 12 Democratic co-sponsors, and one of the things they're focused on, the too big to fail aspect, probably went too far. 147 new regulations cost the industry $39 billion, 83 million paperwork burden hours. That money could possibly go to Main Street America, couldn't it?
Yeah, sure it could. I was just at Zion's Bank with Harris Simmons in Salt Lake City. He showed me his CCAR proposal, which was 4 feet high, double-sided, and it cost him $20 million per year to have that submission. Now, maybe he can take that money and give it back in small business lending, invest in employment, invest in technology. So I think it's a win-win, especially for regional banks and smaller community banks as well.
Richard, earlier this week we had a member of the Federal Reserve also say that the parts of the Volcker rule seem absurd as well. To your point, this is first step. Do you expect perhaps more to come? Because we know the pendulum swung way too far with respect to banks.
Yeah, Charles, one thing they have to address is the leadership structure of the CFPB. Mick Mulvaney even says he has too much power at the CFPB, and Secretary Mnuchin yesterday in a hearing said he supports a commission. Charles, you cannot have all that power vested in a single director at the CFPB. You need to have right-sized regulation. You cannot have the pendulum go from left to right. And look, this leadership structure has been a Donnybrook at the CFPB. We need to make sure we have a balanced approach, because you know what, Charles, in 5 years, we could be doing this all over again at the CFPB. The presidential transition is more orderly than the transition that's happened at the CFPB.
Yeah, of course, there's no transition in some areas. It looks like some folks are entrenched and they don't want to give up their power or allow the new administration to do what it wants to do. Richard, though, I do want to ask you about Gary Cohn's resignation.
Yeah.
Does it make it more likely that we'll see tariffs? Obviously, it gives President Trump a stronger negotiating leverage with respect to NAFTA negotiations. But overall, the impact, near-term and long-term, on our markets and economy.
Look, I am a big fan of Gary Cohn. I think he did indefatigable work at the NEC director. I'm sorry to see him go. I thought he had a great approach to all global economic and domestic approach. The fact that he ran with Lloyd Blankfein, a 42,000-person organization, gave me great solace that he was head of the NEC. I surely hope Shahir Knight and Andrew Oman, his lieutenants, if you will, at the NEC, stick around. We need to have good direction, good policy, and good, sensible regulation in all of the marketplaces in our country.
So is that a thumbs up or down on tariffs?
Well, I want to make sure we have a good competitive marketplace for everybody. We got to make sure it's right across the board. We cannot just put walls around our entire country. We are a country of free and fair trade, and I'm sure hope we can come to a reasonable solution.
Yeah, maybe we'll convince the rest of the world of that as well. Richard, thank you very much. I appreciate your time.
Yeah, thank you, Charles.